Hello, this is Steve Malone with Compass FX. I hope you're doing well today and again some good trades. Let's take a look at the pound dollar. Over the last 14 days, the pound dollar has made a strong move up. You can see here on my daily chart, moving from about the 153 area all the way up to about the 158.80 area. It's fallen back a little bit. And some are speculating at this point that this is set up for a good short trade from a swing to position point of view. Now it's going to move around up and down in this area, and some are expecting that we could see it attempt to make a move back up to 58.80, maybe even 59 before it makes the move down. So what I want to do in this video is go over a few of the details of the pound dollar and build my case for a potential short. Now, there's always that case to where some additional news comes out or some expectations don't come out as forecasted and the pound continues making a move higher. But let's take a look at some of the reasons why the pound is potentially in a situation for a good short in the marketplace. Just simply taking a look at the pound dollar on a daily chart, if I were simply to draw my fibs from extreme high to extreme low, it's sitting right at the 618. This is a 1, 2, 3 down pattern. If you do not close above the 618 and maintain a move of beyond the 618 higher, then you look for the move down. Now, your possible entry point from a daily trader's point of view, if you're trading on a daily chart, would be to look to enter as we break the 50% level, and then your targets would be the 38.2 and the 23.6. And the eventual target would be down here near the 0 level. For your intraday traders, though, you don't need to necessarily wait for a move all the way down here. Just simply go into your intraday charts. But the intraday charts are looking interesting from the standpoint there is a potential from the intraday perspective for this to move back up and test the 158.80 or even push higher to 159. So a couple of things here we see on the daily chart. We see this 1, 2, 3 down pattern. We see 3 lower highs. We see 14 days of move up with no major retracement whatsoever. So you could look at this from the point of view that what would be our retracement. If I went to the top here and then I brought this back down to the bottom, a 23.6 retracement, well, we've reached that. We've reached it down here getting close to about the 57.20 mark. Some are still expecting, though, a push down to 5,700 or lower down to the 38.2 to 56.32, and that would put it pretty much in the top or near the top of some ranges back in this area. Also, taking a look at the Traders Dynamic Index, we can see that the green line is crossing over the blue volatility band and potentially crossing over the red trade signal line, and it makes its push back down towards yellow. Now, it doesn't necessarily mean that the market's going to make a big fall, but there's that chance that as this moves over and back towards the yellow, we're going to see a move back down to the 23.6 level, right around that 57.20, possibly down to 5,700, and then possibly a push on down towards 56.20 area. If you start going into your intraday charts, we'll look at the 4-hour chart. What we have going on here in the 4-hour chart is what's known as a descending broadening wedge. It's descending, but it's getting a little bit wider as it descends. This is not really a clean downward channel, but a broadening wedge. Typically what happens here is you have 2 points on the high side, 2 points on the low side. It makes one more push down and then breaks above. When it breaks above, about half the time it reaches this high back here. And that high back there, like I said, is about the 58.80 area. Sometimes it goes higher, but the chances of it going beyond that is pretty limited. So we look for a possible push up back towards 58.80. It may pin high to the 59 level, giving us a possible nice double top before falling down. Now this teal colored line coming across represents the 10-day moving average. What many traders and institutions are looking at is, does the pound break below the 10-day moving average? If we break below the 10-day and we start making new lows below the 10-day, now we see the pushback down towards 155. There's still a number of options out there down around the 155 level, and more option puts are being placed by institutions to see the pound push back down. Now, one more thing we have to note about the 10-day moving average here is the fact that it could act as support. So if the market pushes down and it cannot seem to break this 57.20 area, it's going to take a bounce up. And this 10-day moving average can be treated as a support to keep pushing it higher. And when we go back to the daily chart, then what some folks are going to look at is this was basically a bullish flag situation for a push higher. If it pushes higher, well, where's it going to push to? The high right now that we've reached is 58.80 is back to the lows that we see back over in here. If we go higher, then we're going to go in the middle of the range, which is going to put us somewhere right around that 59.50 area, maybe even 160. However, there's a gotcha coming up here in the middle of the week. On Thursday, the Bank of England is supposed to come out with its interest rate announcement. We don't expect much change in the interest rates. However, there is an expected change in the quantitative easing program by the Bank of England. The Bank of England is expected to move from $275 billion. They're going to increase it by $50 billion to $325 billion in their asset purchase facility, basically their quantitative easing. This is going to give some devaluation to the pound, and again, the potential to see it roll down. So look for two different components of the market this week suggesting the pound to go short. One is the technicals, a 14-day rise seen in the pound, a 1, 2, 3 down pattern, also the potential breaking the 10-day, only going up to a little bit more up to the 58.80, but probably no more than that, but coming down, breaking the 10-day and using the 10-day as resistance. There's a lot of room to the downside. So given the technical, and then you add the fundamental component of the market where they're going to increase quantitative easing by the Bank of England, we could see the pound dollar move back down to 157, 56.50, and down all the way to right around close to 156 level. So those are my thoughts going into the week. Be careful that with this being a descending, broadening wedge, you're going to get some up and down, and there's that relative chance that we get a push back up, but it's not going to be that much before a fall back down. So again, two components of the marketplace suggesting the pound to go down. Technically, an overbought condition. Fundamentally, the Bank of England not expected to change interest rates, but increase their quantitative easing program, which is in effect a devaluation of the pound. Traders don't like that. Possibly see some selling in the pound later in the week. Well, folks, this is Dean Malone with Compass FX. Hope some of the information I've shared with you about the pound and the potential short in the pound will help you in your trading this week. Y'all make it a good week. Get some good trades. We'll talk to you next time. Bye-bye.